In this grade 11 accounting video, we are going to be looking at creditors reconciliation. We are going to be looking at a creditors reconciliation statement as well as a creditors ledger account. We are also going to go through it with our calculations on the errors and omissions that are made on these two accounts. But before we get into any of that, we need to know what is the theory regarding creditors reconciliation that you need to know. So let's start first with our theory. With theory, basically the aim here is for you to know, as you are taking your notes for this topic, what are the things that should be at the top of your mind, or the things that you need to make sure that you prioritize. The first thing being the treatment of creditors. You need to be able to know how we treat creditors, and then from there you need to know what is the difference basically between a creditor's ledger and a statement of account, as well as what are the source documents that we are going to use when we are dealing with creditors reconciliation, and what do each and every one of those documents mean. So let's go back to the treatment of creditors and talk about what is the correct treatment of creditors. So first of all, we know that with creditors we are dealing with people that you as the business you owe. So when I'm talking about we in this instance, I'll be talking about us as the business. So if I say we, I'm referring to the business. So whom we owe, that is our creditors, and therefore that makes creditors a liability. You see in that statement I said they are a liability. Why? Because we owe them. So the main thing that you need to know, that when you open a creditors control account, which is where we record every single person that the business owes, that creditors control account, the T account in the ledger, it will increase on the credit side, meaning anytime I buy anything on credit, I'm going to record that amount as an increase on the credit side. And every time I record a decrease, I'm going to record a decrease on the debit side. So why do we do that? Remember, a credit is for when I am buying. That means that my liability is increasing. The number of the amount that I'm owing to that business basically is going up, and when it's decreasing, it's now me paying them. So one thing you need to understand about a credit is that a credit is not necessarily something that is good. We want to have as much less of a credit as we possibly can, because that means to us that we are of lesser risk. So that's why when a credit increases, we record it on the credit side. If you were looking, or you listen to the video we did on bank reconciliation, we basically explained that on the credit side we record what is not good for our business, and on the debit side we record what is good for our business. So when we buy something on credit, it means that our risk as a business is increasing. So that's why we put that on the credit, to show that this is not good for us. And anytime we pay a credit, it means that we are now reducing the risk that we are under. That's why that will go on the debit, and it will basically decrease, because that decrease shows what? It shows that our business is no longer on as much risk as it was before we paid whatever amount that we would have paid. So that's why anytime you buy on credit, that amount is gonna be increased on the credit side of your creditors control, and anytime you come back to now pay your credit, it is now going to be debited on the debit side. Then we move on to what we call a creditors ledger. So as you are preparing a creditors control account, a creditors control account basically is for all of your creditors. So you could be owing 5 people, you would put them in a creditors control account. But a creditors ledger accounts for one creditor at a time. So if you are owing cash build, for example, you're saying that as a business I go to cash build to stock for my supplies. That the account that you have with cash build, you will draw it up in your books in what we call the credit build creditors ledger. So it will be specifically for one business that you are owing. So if you are owing 5 businesses, in creditors control you will total and sum up that amount and record them at the same time. Whereas in a creditors ledger, you will basically open 5 creditors ledgers, which means each of those businesses will get its own individual creditors ledger. How is it different from a statement of account? A statement of account is what the creditor, now the business that you are owing, they're going to prepare it and give it to you every month end. It's similar to a bank statement. Remember in bank reconciliation, we talked about there's a bank account, which is what I draw in my books, and a bank statement, which a bank gives me. In this scenario, in my books, I draw a creditor's ledger, and my creditor will give me a statement of account. Basically, it would be what they prepared in their business and their books for me to see how much I am owing them and how much I need to pay them. Hence, the statement in the blue box there, it says, we prepare the creditor's ledger in our books, and the creditor issues us a statement of account. Basically, it's to just reiterate on that point that a creditor's ledger is what we prepare in our business, in our books of the account we have with cash build. And then cash build will now come back and give us a statement of account of what they have prepared in their books, because remember, my creditor is also a business on their own. Then we move on to the issue of source documents. When we are dealing with creditors control, you need to be able to know what are the invoices that you are going to find commonly when dealing with credit transactions. So the first one is going to be what we call an invoice. An invoice is what I get when I am buying on credit. My creditor, meaning the business I'm buying from, will keep what we call a duplicate of the invoice, and they will give me an original of the invoice because I'm the customer. So it's vice versa, unlike what you do in debtors reconciliation. In debtors reconciliation, you give them you give the customer the original and you keep the duplicate because you are the business in that point that is selling to another. So in this instance, to a creditor, to my creditor, I'm the customer, and the customer always gets the original. So I'm going to get the original invoice for when I'm buying. They do not give a receipt. A receipt is what we deal with when we're doing bank reconciliation, because a receipt is for cash transactions. I did not pay cash. Remember, I'm buying on credit. I'm saying, give me the goods and I will pay you later. So they can't give me a receipt because they did not receive any money from me. So what they will give me is an invoice. An invoice basically states that this is the amount of goods that I took. They cost however amount of money, and their quantity as well, and how much I'm now owing. So then the invoice basically indicates how much I am going to owe to my creditor after taking those goods on credit. And then we also have a second source document that is very common, that you are going to deal with very commonly when we are dealing with creditors reconciliation, and that is the credit note. The credit note is issued when we are returning goods that are bought on credit. So sometimes you are in a situation that these goods that you bought from cash build, they come with defaults and I now need to return them. What I get is a credit note. So let's look at a question so that it would put everything that we have just learned in theory into practice, and to see how it exactly looks in an exam question. So it says a creditors reconciliation for putty traders. It says putty traders buys goods on credit from Mabuto suppliers. The required. Use the table below to indicate the changes to the creditor's ledger account in the books of putty traders and the creditor's reconciliation statement on 31 March 2023. So basically what we are going to what we are going to correct here, we are going to correct the creditors ledger account and the creditors reconciliation, which is basically also known as the statement of account. So that's our creditors reconciliation. So what we are saying is, remember, like with a bank statement, I cannot come into the books of the bank and fix their statement for them when they have errors. Similarly, if Cash Build has an error in the statement of account that they have sent me, I cannot fix a statement of account for them. What I can do for them is I can prepare for them what we call a creditors reconciliation. Just as the same way we have a bank reconciliation. I cannot fix the bank statement that I get from the bank, but what I can do when the bank has made an error in their bank statement, I can prepare for them a bank reconciliation statement. So here I'm preparing a creditors reconciliation statement to fix the statement of accounts. I hope that is making sense. So that's why you're seeing in our answer book, it says a creditors reconciliation, we have the balance that we already started with for a creditors ledger and the balance in our statement of account. So the creditors ledger, this is my book, I can fix it. So in information A there you see that we have a creditors ledger of Putty traders, but it is for Mabuto suppliers because remember we are preparing for each one individually, and at the very bottom you see that amount that I used as my balance in my answering book. Similarly, in information B, I have now a statement of account that is coming from Mabuto suppliers. This is that statement I'm saying I cannot fix. But what I can do, if there's an error, I can prepare a creditors reconciliation statement. So let's look at some errors and omission to help us adjust that balance in the creditors ledger as well as the balance of the statement of account, which will automatically be now my reconciliation. So Roman figure 1 says the incorrect entry of a debit note 54 in the creditors ledger account of Mabuto suppliers relates to the correct credit note 123 on the statement. So we are going to go back to information A and B to look at that. So we are seeing the debit note 54 on the 17th of March 2022. It is for 17,280, and they're saying they need to look the same because these things are supposed to match. What I prepared in my books as well as what Mabuto is going to send me is supposed to match. But look at it. In Mabuto, it says it's the credit note 123 on the 17th of March. It's 13,680. So what I'm going to do is find the difference. The difference is I'm going to take the amount in my creditors ledger of 17,280 minus the 13,680 and it gives me 3,600. That's what I'm going to adjust with. How am I adjusting? I'm going to add it in my creditors ledger because first and foremost, we need to understand that the statement told us that the error was in the creditors ledger. It was incorrect in the creditors ledger, but in the statement, it was correct. So the 13,000 was the one that was correct. The 17,000 was wrong. But now I know you are wondering, shouldn't I be minusing it if the one in the statement is wrong? You now need, this is where you need to remember this was a credit note, meaning they were returning the goods. When you return goods, that amount is supposed to reduce your balance. So that means the creditors ledger was reduced with way too much money. That's why we need to add it back. Then we have the second error or omission in Roman figure 2. It says invoice 102 was incorrectly reflected in the account of Mabuto and the creditors ledger. The goods were purchased from Mabuto suppliers. So this means that this invoice was not supposed to be in our creditors ledger because it's not coming from Mabuto suppliers. Basically, we took a credit that we owe to another business and put it in Mabuto suppliers because of the similarity in the name. It's Mabuto and Mbuto. So that means the invoice 102 is not supposed to be there. The invoice 102 is not supposed to be there because it does not belong to who? To Mabuto. So we look at the invoice 102. You see it there. It's still on the 17th of March for 81,900. This 81,900, basically it increased our balance. We need to now reduce it, meaning we are going to go and minus our creditors ledger with 81,900 to basically say that we had erroneously increased our balance with 81,900 that wasn't supposed to be there. So when you look at that balance of 295,640, in it there is 81,900 that's not supposed to be there because this account is supposed to be for Mabuto only, and that one belongs to Mbuto suppliers. Then we move on to Roman figure 3. In Roman figure 3, we have invoice 83. Remember, invoices means that we are purchasing. It says that it is incorrectly recorded in the statement of Mabuto suppliers. So that means the statement is the one that's wrong, meaning that our creditors ledger is correct. So we are going to look at the difference, what they did and versus what we did. So invoice 183 from their statement in information B says 40,500, and they're telling us this is the error. So it's not supposed to be 40,500. What is it supposed to be? We are going to find out from our creditors ledger in information A. We see it on the 21st of March. Invoice 183 is 100,500. So it means that the credit is supposed to be for 100,500. Anytime there is a difference in amounts, the first thing is you take the bigger amount, subtract the smaller amount. In this case, it gives us the difference of 60,000, and this 60,000 is what we are going to use to adjust. Remember, they said the statement was the one that was wrong, and it was short because remember the statement had 40,500 and it's supposed to, we are now increasing it to be 100,500. How do we increase it? That means we are going to go to it and add 60,000 as an addition to the 40,500 that they had already recorded. So we are only increasing with the difference. Then in Roman figure 4, it says Mabuto suppliers also purchase goods on credit from Putti traders. So meaning our creditor is now buying from us on credit. So meaning we are now becoming a creditor to our creditor. Putti traders has transferred a debit balance from a debtor's ledger, journal voucher 66. Mabuto suppliers will offset this on the next statement. So in this situation, it's common with two businesses that are buying from each other. Sometimes my creditors can buy from me, and if they buy from me and I was already owing them a certain amount of money, instead of me having to pay them what I owe them, they just come to me and take goods, and then we cancel off that debt. So you see there that on the creditors ledger there was a journal 66 for 10,800. It's on the debit side to say that I do not no longer owe them that amount. Why? Because they came and took goods from me. The problem here is that when you look at Mabuto, the statement from Mabuto in information B, there is nowhere where they talked about that journal voucher 66. So basically my job is to enter it. I no longer owe them the 10,800, so I'm going to go in my statement of accounts from Mabuto and I'm going to minus 10,800 to indicate that I no longer owe them that amount. So basically the situation was, I took goods from them for 10,800 that I owe them, but instead of me paying them, they came to me and took the goods of the same amount. So I'm supposed to now minus it in the statement of account. They didn't do that, so that's why I'm putting it there. Then in Roman figure 5, it says the transaction on 24 March 2023 is for merchandise returned to Maputo suppliers. So remember that we do have situations where we buy on credits, the goods come on default, and so we return those goods, and that's why we have to issue an invoice, a source document called a credit note. The problem here is that in the statement from Maputo suppliers on the 24th of March 2022, you see that there is a credit note 142 for 16,200. But when you go to our books in the creditors ledger on the 24th of March, you see a debit note 195 of 16,200. The problem is on the side which it is on. Remember, I'm returning goods, meaning I no longer owe Maputo that money. So if I no longer owe Maputo that money, I'm supposed to record that amount on the debit side. But now, the first time I record it on the debit side is going to cause an effect of 0. The second time I record it, that's where it's now going to be the correct recording. So I have to minus it twice, and when I minus it twice, it gives me 32,400. So anytime you have an amount that you recorded on the wrong side, you have to record it on the correct side, but you have to do that twice. Why? Because the first time is going to be, the first recording will record the error recording that you did before, and then the second recording will be the correct recording that you were supposed to do. Then the last transaction, we have transaction number 6, and it says the statement reflects transactions up to the 25 March 2023. So that means that anything after the 25th of March was not shown on the statement. So you see that on the creditors ledger we have a transaction on the 27th, which we already dealt with. It was general voucher 66, but we also have EFT and discount on 31 for 154,380. That 154,380 was never recorded in the statement, so we are going to go record it in the statement as a minus. Why? Because remember, it's a payment. It says EFT and a discount. So meaning the EFT, I was paying them, and the discount, they gave it to me. Basically, I'm no longer owing them any of those monies. Then lastly, we are going to total our creditors ledger and our statement of accounts, which by the way need to be the same amount because we are recording the same things in both of them. So if they are correct, both of the totals are going to be the same, or they're going to be equal. So we total them with 184,940 on the creditors ledger and the same 184,940 on the statement of accounts. When it comes to a creditor's reconciliation, you will notice it is not necessarily a particular statement that has a framework like a bank reconciliation does. What's important with a creditor's reconciliation as well as a debtor's reconciliation is, are you able to calculate your errors and omissions in the correct manner? So go back and redo them yourself. To have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel. And if you have any questions, leave them in the comment section below.